let's say the NQ is your study, and I'm gonna say this, and I'm gonna close the space because I need to get off here. Been doing it too long. Let's just say you want to use the NQ, okay, Nasdaq futures, and you pull up your weekly chart and you look at, say, I'm going to just randomly pull a number out. Let's look at the weekly candle. I'm not doing it. I'm saying you do it. 7 weeks ago. Okay, seven's just a number just jumped in my head. There's no reason why. I have no idea what 7 weeks ago what price did in net and Q. I don't recall. I don't remember. It's too far back for me to remember key levels from that time frame. If it was last week, I would, but 7 weeks ago, I don't know. But what was the week prior to 7 weeks ago? In other words, right now we have not opened up on this particular trading week, and today's date is November 27th. It's 10:20 a.m. New York local time on a Sunday. So the markets are closed right now. If you go back 7 weeks ago, or 7 candles on the weekly chart ago, the 8th week from today, you would be looking at that particular week, expecting or anticipating what the following week would look like, which would be 7 weeks from today, looking back. Whatever that weekly candle did on the 7th week, you should pretend right now, this is what your pseudo experience does for you. You pretend that you had it right in your bias. In other words, if it was an up candle that expanded higher, or if it was a down candle that expanded lower, you're assuming that you had that part determined beforehand. Then what you do is you go into those particular days of that week and you look at it from a hourly standpoint. You break it down from hourly, from Monday to Friday. Put your daily dividers on, outline the times when the session starts that we like to trade, like 8:30 in the morning till 11 o'clock in the morning. What setups formed? How did they form? Did it reach for liquidity, or did it go back into an imbalance before it created the setup that was in line with that weekly expansion, whether it be bullish or bearish? And then you do that individual day on a 15-minute candle, and you do the same markups in more detail. And you do the same thing with the 5-minute chart, the 4-minute chart, the 3-minute chart, the 2-minute chart, and the 1-minute chart. And do this stuff. If you don't want to do that, you will not learn this. You will not learn it any other way. That's what separates the men from the boys, the soldiers from the cannon fodder. You have to do these things, and you have to be diligent about doing it. And you continuously do it, and you study and you study and you study, and you go through all the time frames, just like that, and you collect every new week of data. Even if you had losing trades, you record it in your journal as if you knew that was going to happen, and you record it in your annotations. And what happens is you're retaining the pattern recognition aspects of seeing the examples seen over and over and over again, and you're recording your own annotations. Now, in truth, you're lying in the annotations about having seen it, but you're rewarding yourself visually and through annotation. So your subconscious retains it as, this is a good experience. I saw this coming, and I'm happy that I saw this pattern fulfill as I learned it. Now, that's not the same as lying and saying, I took this trade, like you see everybody on Twitter. I took this trade. I took the same trade as you did at ICT, and they don't have their executions. That's why I don't like those kind of posts. You need to go through your annotation, say, I'm thankful that I see the model unfolding in this example exactly how it should have. So your brain sees that, you remember it because you wrote it. So it's tricking your brain and providing pseudo experience. It's self-talk. Okay. It's a way of replacing anxiety and nervousness about not ever learning how to do this with positive reinforcement. And you're collecting examples that you're going to refer to continuously in your study journal. You're going to go back, looking, okay, this is what that week looked like. And it's a wonderful resource because after, there's going to be times and you look back at old moves and you think, man, I wish I had looked at a 1-minute chart on that day. You'll have it. And that's why it's important for you to be a specialist. You see these guys out there. Yeah, I follow 27 pairs. That makes me professional. No, that makes you a fucking junkie, and you're not a professional. You need to specialize on one market, maybe two, but one market. And here's how you know there's a professional. If they can tell you what the 15-minute highs and lows and the 5-minute highs and lows in the New York session and the London session, they're a professional. Ask yourself right now, Could you say what the 15-minute high and low was and the 5-minute high and low was in any particular market? You probably can't. And these same people on Twitter and YouTube and Discord and Instagram and Facebook, they're all full of shit. Okay, I know what I'm looking for. I know what levels I'm working, but I can't remember it 7 weeks ago. Okay, and I just reached 7 because that's the number that just jumped in my head. Mathematically, that's the number everybody's going to reach for between 10 and 1 anyway. But I covered a lot of stuff